Joe Vitale here at Vitale Wealth Management with this week's Gradient Investment Market Update. All information is gathered as of the week, October 27th, 2025. Let's get into the week in review. The major U.S. indexes ended the week higher. The NASDAQ was up 2.31. The Dow and the S&P both advanced 1.93 and 2.24% respectively. And small cap stocks once again outperformed with a 2.51% weekly gain. After 9 consecutive weeks of positive performance, gold took a pause, sliding 6.3% for the week. Meanwhile, oil prices climbed roughly 7% following new U.S. sanctions on 2 major Russian oil companies. Now, despite the rebound, crude oil remains below mid-June peak of $75 per barrel. And on the economic front, investors received the CPI numbers for the month of September, the first major data release since the government shutdown began on October 1st. Inflation rose more slowly than anticipated, with core inflation rising 3% year over year, down from 3.1% the prior month, which is why the big rally. They were very happy with it, so we didn't have big inflation. The upcoming economic release, this week's key economic data releases, will provide further insight into the path of inflation and monetary policy. On Wednesday, the 29th, the Fed Reserve did conclude, because today is Thursday, the 2-day policy meeting with interest rate decision. They did cut rates a quarter point, which was expected. We'll talk about that again more next week. And then today, the Q3 2025 GDP estimate will show the U.S. economic growth for most recent quarter. And tomorrow, the producer consumption expenditures and the PIE will offer further perspective on inflation trends. Now, the federal government report could be delayed or canceled pending resolution of the government shutdown, which began on October 1st and is still not settled. So we're still waiting on that right now. Now, let's talk about the market outlook. The Q3 2025 earnings season is off to a strong start. 30% of the S&P companies have reported the third quarter results so far, with both shares of companies beating their estimates and expectations. The magnitude of those surprising come in above a 10-year average. This week, a handful of U.S. mega cap technology companies will report. So we did get heavyweights like Meta, Alphabet, Microsoft, Amazon, and Apple. Amazon and Apple are coming tomorrow. Now, these reports will offer insights into the trajectory of AI investment and broader market directions, especially given the so-called Magnificent Seven stocks now representing over 35% of the S&P total weight. Meanwhile, on yesterday, the Federal Reserve concluded its policy meetings with a press conference and interest rate decision, and the cooler than expected inflation data could pave the way for another cut, which it did. So that was good in that respect. Recent activity, there were no changes in the gradient investment portfolios last week, so every quarter we like to rebalance that. Some of the stocks in the news, Procter & Gamble, which is in the G50 and it's also in the Core Select portfolio, reported better than expected quarterly results and reaffirmed its full year guidance despite continued tariff pressures, which is just like nothing. I mean, basically we're saying nothing come from that. Shares gained 0.35% for the week. How about RTX, which is in the G50, exceeded both revenue and earnings expectation last week and raised its full year outlook, citing robust demand for its missiles and aftermarket services. And the shares surged 11.16% for the week. Next, we're going to talk a little bit more. We're going to see about all the big tech. Microsoft went down big time today, and that's just part of it. But Amazon's reporting tomorrow. Apple's doing very well. Everything's looking really good. But that's what everybody's saying. What do we do, Joe? Is it time? Is the market going to keep going? Who knows? Everything does look good. But we're long-term investors. We're not trying to market time. We're not in and out. And we're not going to make knee-jerk reactions. Have good amount of money, safety, good amount of money in the market. We're going to be able to partake of this rally, which is great. I think it has a lot of legs, and we're going to keep going with it. But if you like to also lock into higher interest rates before they go down, because as the rates come down, the rates on the annuities also come down, and the guarantees do as well. Now's the time to lock in before they keep cutting. That's it for today. Thank you so much for being part of the Vitale Wealth family. If you'd like to get a hold of us, give us a call at 855-756-5700. Visit us at vitalewealth.com. Thank you so much. God bless you. We'll see you again next week.